All right, guys. What is going on? What is Gucci? What is good? What is good, man? Okay, we should be good to go. I got a lot of stuff going on. All right. Excuse me. What's good? Scott, Julius, Eric, Willow, Slowly, Mark. Oh, yeah. TP Tuesday in full effect, baby. What's good? Nicholas. Market Maker Tuesday? That just doesn't sound good. You know what I mean? Like, seed oils. It just doesn't sound good, chat. Doesn't sound good. Right, Omar? And Cameron? Oh, I meant to hide all this. I guess you're getting it early then. Now half of you guys will be late anyway, so we still got time. Yeah, man. Did you guys see that you see that reel I posted? I just have the best ones, don't I? I have the coolest reels, don't I, chat? Sometimes. Maybe not all the time. But every once in a while. Where did it go? Hey. Yeah. Did you guys see that? Did you guys see that or what, man? That is stinking cool, isn't it? Isn't that cool, chat? Sometimes you just got to do some silly stuff, you know? This is proof, chat. This is proof that anything works, okay? Anything works. If I can use the C8 logo for support or resistance, you know what I'm saying? Like, that just goes to show that some people just try so hard to find the right stuff, you know, or the right indicators with the right settings. Just go into Google, look up C8 logo, copy, paste. See that? Look at this. Look at this down here, chat. See that? Look at those bodies right there. See, we put the C8 logo at the low. Bodies respecting the bottom of the C8 logo. See that? We break out of it. Look at the upper end here. Support. Look at the upper end here. Support again. Bang. That is Chevy support and resistance, right? American made, baby. American made. I'm sorry. That's just too good. You know what I mean? And I'm giving you this stuff for free. Imagine that. Imagine that. Jorks, Torty. Who else is here? Felix. The only shorts. Oh, you took shorts today. You took shorts today. That's fair. I almost did. I did not. And I mean, I feel like if I would have gotten up earlier and I was a little bit more awake, I probably would have. But you at least give me a good starting point for today, Tiago. What's good? You give me a really good starting point today. So, where is it? What's the title of today's stream? Okay. Key elements in day trading precision. Okay. Key elements in day trading precision. I'm gonna give you 7 laws today. We're gonna go over 7 laws. YouTube shorts. But I was short today, haha, 1 a.m. in German time. Oh, nice. Oh, nice. Making money right before you go to bed. Love that. Love that. What was it Warren Buffett said? If you don't make money in your sleep, you'll work to the day you die, or something like that. Well, anyway, we're going to go over some laws. You guys ready? Type law in the chat. LAW. Type law in the chat if you guys are ready. There's only 7 today. There's only 7. Small L on one account, small dub on another for me today. Got the charts. Oh, got to the charts too late. Yeah, Cameron, that'll happen. I was notorious for that over the years, being late. But again, you know, I have sleep apnea. It's not cool. It sucks. I don't recommend it for anybody. It's not fun. Scott, red day here. Well, it may be a red day for your account, but it's going to be a green day in your learning. It's going to be a green day in your understanding. It's going to be a green day in your experience if you reflect on it, right? Scott, did you read How Successful People Think by John Maxwell? That was the book of the month last month, right? It's all about reflective thinking. What did you do wrong? What can you do right next time? That will turn, well, your account won't be green, but that'll at least turn a red day into a green day, okay? Not the shitty band, but we want to upgrade the day, you know? We don't want to be an American idiot, you know what I'm saying? I don't know if you're American or not, but in America, we don't want to be American idiots. You know what I'm saying? All right. Moving on. Gold buys? No. I did not buy gold. I thought about it, but again, I didn't do that. I'm not using a CPAP, bro. I'm not, you know, I'm not going to be Neo from the Matrix and be plugged into all these machines. That's not going to happen. Plus, you can get fungus and cancer and all kind of shit in your lungs from CPAP machines. So, no thanks. Anyway, let me get to it, man. You guys keep distracting me. And we got to eliminate distractions. All right, first up is law number 7. What's law number 7, chat? What is law number 7? Who knows? We can look at gold later. Again, I mean, it did leave behind clean highs yesterday, so they may come back for that. But I don't look at gold all the time. I just don't, you know. Man. Law number 7 is what, Scott? Scott says, what you sow, you shall reap. Law number 7, chat. Law number 7 is the law of return. Or the law of the return. Whatever. Willow, I do not want to trade places with you, brother. I definitely appreciate the offer, but infants and babies are just not my thing. You know what I'm saying? They're just not my thing. If you can trade with these distractions, you can trade anywhere. Oh, well, that's why they made noise canceling headphones. But anyway, law number 7 is the law of the return. So when you're looking at the buy side curve of a market maker sell model, previous bullish concepts can become inverted, right? Now bearish, or, all right, so take a look at this. Take a look at the bottom half here. Looking at the sell side curve of a market maker buy model. So let's pause. Let's pause and reflect, because some of you may not understand. You know, what is the sell side curve of a market maker buy model? Fear not, my friend. I will show you. I will not leave you hanging. All right, I'm not going to leave you hanging. This is a buy model. Okay, this is a market maker buy model. The left side is the sell side of the curve. Okay, that means the original consolidation, the distribution, the redistribution, and the sweep on liquidity or potential run on liquidity. It's usually going to be a sweep, though, if it's a buy model. Okay, so from the high down to the low that's been set, That is the sell side of the curve. Okay? Type curve in the chat if you guys are with me so far. C-U-R-V-E, I think. Type curve in the chat if you guys are with me so far. Original consolidation, distribution, redistribution, reversal. Either a smart money reversal or a sweep on liquidity. You know, it's practically the same thing, but something to that effect. Okay, so from the low, everything on the left, that is the sell side of the curve. Okay? Now, mind you, this was put out sometime last year. You've had this PDF for a long time. If you don't have the PDF because you're not a member, you can still become a member. But even if you're not, the 48 Laws video has been out for a long time, and that's public, right? So watch this. We are looking at the sell side curve of a buy model. Okay, so let's do that. On ES, by the way. Okay, so that's going to be all of this. See that? That's going to be the original consolidation. That's going to be the distribution, redistribution to go lower. And then that is our low to go higher. So from this low, looking left, we need to see what actually took place. We got to do some evidence here. Or we got to do some detective work and find some evidence here. So what do we have? Again, it's always in order. Original consolidation, we leave it. We trade back into it, we leave it again. So that's going to be left open for a while. Cool. But right here, okay, at 8:45, we got to pause for a second. Pause and reflect. What do we got? We got this up candle. Well, here's equities open, by the way, 8:30. So here's 8:35. What actually takes place? We trade higher, again, into the original consolidation. Wonderful. Then we leave it. Okay. Now, 8:45 becomes mega important. Mega important. Again, a lot of traders might not think so. A lot of educators might not tell you 8:45 is important. But as often, okay, I'm telling you that it is. It's very important. What actually happens here at 8:45? 5-minute time frame. We trade up, bang, into that up candle, right? And then away from it. And then again, the continuation lower. So what does that tell you about this up candle? What does that tell you? That's highly, highly important information. See that? This up candle was utilized to go lower. Was it not? Yes, it was. You're going to see that same information here on a 1-minute time frame. You have a series of up candles. Okay? So it's the same information on the 5-minute. Only the 1 minute obviously is going to take 5 1-minute candles for one 5-minute candle, obviously. And that series is right here. You see that? You see how that works? Right there. Bang. It trades into it and then off of it. All right? So that means that was once what? Let's go back. It was once what? Bearish, right? What did I tell you the law was? What is the law? Previous bearish concepts can become inverted concepts, now bullish. Oh, now bullish, right? Again, this is information you already know. This is not new to you. Now also watch this. I've already done a little bit of a investigation for you. Original consolidation, right? We have a high, low, lower high, and we trade through it. We trade through this low right here, okay? We trade through it here. It comes up for this series of up candles, then trades through it again, and now, okay, this is why I said this is precision concepts, because a lot of people still don't understand this, or they don't believe it. Okay, that is a very, very small time frame mitigation, not the high, low, higher high formation. It's the high, low, lower high formation. It has the same function as a mitigation. We've already talked about this. You guys should know this by now. Okay? But again, my point is this bearish, this down candle also bearish. So what do you think is going to happen? What do you think? Based on information you already have. Most of you have downloaded this by now, or you've screenshotted this by now. So without even seeing if the low's been set, without even, I mean, you see what current price is already done. But based on this information, what do you think is going to take place? Okay? Let's do some prediction here. Some people say, don't predict price, you should react. That's wrong. That's wrong. That's goober. We can predict. It's banks buying to provide the liquidity for the other side of market maker model curve and will mitigate it to make money on the other side of the curve. So market maker models is a hedging program for institutions, I would say, for smart money. Yeah. So that is part of it. That's really more context. But even with that being said, if the previous concepts that proved bearish, what are they going to be? They're going to become bullish, right? So what does that mean? That means this down candle here that was bearish should then do what? Once we get above it, once we get through it, this should support price. Once we get through this, this should be support. Yes or no, chat? That is what the law says. So it's a simple yes or no question. Does that match what the PDF says? Does that match the law that I told you would occur? Well, let's take a look. Let's take a look. We trade lower. Okay. Now, why is the low down here? Again, not to have another I told you so moment, but what other information do you have here? February 6th low. What's important about that? Well, it's a higher time frame concept, of course. But what did I tell you about measured moves? I didn't make this a law. I don't tell you ahead of time how many points price is going to run below an old low, so I don't make it a law. But I know in the past I have told you what a measured move is. Specifically for ES, you can take whatever price level that is, and you can drop 5, 10, 15, 20, 25, as much as 30 points below an old low. Okay, that was the max. I told you anything beyond 30, it's probably not going to be a reversal. It's probably just dead. Okay? So now watch this. This isn't part of the law, but, you know, I'm just giving you some more context here. 6751.5 is the low. Right? Right here. 6751.5. Now watch this. We're going to drop down 30 points exactly. Can y'all see that right there? It says 30. Okay, when I move this line up or down, it changes. 23.5, 25, right there, and then 30. And I told you 30 was the max for a measured move, right? Bang. Look at that. Look at that. I told you would be learning what? Precision. This is stuff you already know, Chad. We've already talked about that. 30 is the max amount of points for ES that I believe is the measured move for a sweep of liquidity. Right? So that's weird and somehow strangely random that pretty much set our low of the day. It went beyond that a little bit, like 1 or 2 points. It's not going to be perfect, okay? Everything's not always going to be perfect. But we get I can't tell if that crossed 25% or not, but either way, we trade higher. We get our retracement, and either this or this becomes our low risk buy. I say this because we do have an imbalance right there. And I say this because obviously these lows, very small time frame, get swept here, and we do trade higher. Okay, so what's happening right here? I'm gonna zoom in because I can't even see that, and I'm in front of a 27-inch monitor, so I know you can't see that. What's happening right there? What's happening right there? It ain't very clean. It ain't the most bodied up candle there is. But what took place right there? What took place right there? Did we close inside of those purple parameters? That's funny. The Barney box, right? The Barney box strategy. Jesus. 67.60 to 67.64.75. What was that? Remember this? That down candle that was bearish. What are we doing right here? We're trading outside of it, right? Thank you, Nicholas. So if it was bearish and we just traded through that, what's it going to be? What's it going to be? Bullish. Oh, look at that. Look at that. Omar is blocked. I'm surprised Mason didn't say that. Where's Mason even at? Somebody needs to find Mason. I know I banned him more than anybody else, but I haven't actually banned him. Omar's kind of pushing the envelope there, but look at that. Look at that. Oh, well, why would anybody buy after a buy move? Because the fucking algorithm is going to take it higher. What are you talking about? Bang. Look at that. Higher. Remember this? Remember that 5-minute candle? That got traded through. That was bearish. What's that going to be next? Oh, bullish. Oh, shit. Oh, wow. So difficult. So hard. No one can predict price. Yeah, you can't. If you doubt yourself, you won't be able to do it. If you don't think this stuff works, yeah, you definitely won't be able to do it. Go keep looking at your RSI and your MACD. And I'll keep taking wick entries and wick exits. All right, John, calm down, calm down. You're doing too much. Just give us the business. You gotta stop bragging so much, John. I'm your mentor's favorite for a reason. But there's law number 7. Okay, what you sow, you shall reap. The law of the return. Okay, so simply put, read the text. Read the text. Previous bearish concepts can become inverted concepts, now bullish. So what was once bearish, now bullish. What was once bearish, now bullish. This is also the second stage of accumulation for a run on those highs. The law of speed. That was not a law I was going to go over today, because I do think our first leg was actually faster than our second. So that usually doesn't occur. But, you know, there's that. All right. So there's your first law for today. Law number 7, the law of the return. The second one for today is going to be actually the very next one. I taught you this already. This is the same thing, but inverted, right? Because this is a sell model, but reaccumulation becomes distribution and accumulation becomes redistribution. So this inverted is what you saw. What you saw was distribution become reaccumulation. Trading is just so difficult. See that? It's the same thing. One's bullish, now bearish. All right, number 8. Moving on to number 8. Be a sniper, not a machine gunner. So what does that mean? It means quality setups, not quantity of setups. That's why I said earlier, I thought about shorting to go down to the manipulation low. But, you know, I just wasn't like in here. Because I saw that, and then I went, yeah, it's going to run for that low. And we traded up. And I just didn't think like the juice was worth the squeeze or whatever. I just didn't think it was worth it. So I was like, you know what? If we are going to come back for that, I'll just wait for the manipulation and I'll play the buy side. So I saw all of this and went, okay, what the hell is that? And then so we then got like a much further extension below February 6th low, nailed 30 points below it. Then we got our low risk buy. I almost bought that as well. And in all honesty, that was the best opportunity to long there. Right? 950. That's a weird fucking time, isn't it? 950. That's weird. What is so weird about that? 950. That's strange. Isn't that random? Isn't that so random and strange? 950 to 1010. What is that? Well, ladies and gentlemen, that is a macro that doesn't exist, obviously. 950. Right there. Down. I don't even know what this trades down and into. I guess these down candles here. But nonetheless, macro starts lower. Takes out. Again, these or this low at least. Okay. So it's weird. It's weird and strange and completely random. Nobody ever knows that this does this shit. And then bang. So you got that reversal macro until here, right? So you see how that price respected that inside that macro time? Yeah. Time price context. I told you this is elite level shit and you can't beat this. You can't beat this. It doesn't matter how hard you try. You cannot beat this. That as a low risk buy, you can't beat that. That as an add-on, you can't beat that. This as an inversion, you can't beat that. And then that is what I recorded for you today. I recorded that. Well, I traded it too, but I recorded that for you just so you guys could watch it. And of course, I stuck a C8 logo over it. Who wouldn't do that? I tell you guys all the time, the C8 logo is right here. You can see it. There it is. That's obviously just for fun. Clearly. But it just so happens that the C8 logo matches the market maker models. I don't make the, or the buy model at least, but I don't make the rules. I didn't design the logos. But that's pretty cool stuff, huh? And yeah, Mark. Very smart to wait for the play on the buy side. Right. Now, again, I haven't attempted to do this. And if I did attempt to do it, I would absolutely do it in a demo account before doing it live. Is trading every stage. Meaning shorting the original consolidation, adding on after, closing below an old low, buying below the old low, and then buying a low risk buy, and then buying the add-on, and then buying the second stage distribution. Like, it's selling on the sell side of the curve and buying on the buy side of the curve and playing every single stage. I just don't have a desire to do that. Not with real funds anyway. Now, if I go into a paper trading account, I could probably do it. But again, what I'm trying to teach you here, let's go back. Be a sniper, not a machine gunner. I literally teach you not to do that. Now, if you did and you got it right, of course, you're going to grow your account exponentially, especially if you have a 1% risk on every trade. Because you're shorting and then adding on and then adding on and then adding on. Like, That's easily a 6 to 10% swing to the low. And then to reverse it to long below the old low at 1% risk, and then the low risk buy at 1% risk, and then the add-ons at 1% risk, you're gonna have another 6 to 10% on the way up. So think about that. Between 8 to 10% on the way lower, plus another 8 to 10% on the way higher. Think about what that would do to your account. Oh, that's like 20% in a day. It could be. But again, I don't do that. I don't try to do that. I may think about it one day, but again, what I teach you to do is to focus on quality setups, not quantity. You can trade that way if you'd like. I'm not going to tell you not to do it, but it makes sense to me to wait for the quality setup and then put some size behind that and then go one and done. A lot of people call this the one shot, one kill, just one trade. No, I agree, Tiago. I agree. I don't always like the way that price makes a low, or it does what it does at certain like lows. You know what I'm saying? Like, we did have an inversion. Excuse me. We did have an inversion, I guess, but you don't always need the low. Okay. Now, again, I'm not going to argue that this isn't really, really good RR. Obviously, the closer you are to the low and actually hold for the high, yes, you're going to have really, really good RR. 1 to 5, 1 to 8. A runner could easily be in the double digits. I'm not arguing against that. I would never do that. What I am arguing is, if you did not get in down here, you have an opportunity to scalp. Because again, the laws are panning out in front of you. The algorithm is literally tipping its hand to you. All the people that don't think an algorithm exists, I prove it all the time. Every week I tell you, the algorithm's doing this, it's doing that, right? Price is getting ready to trade up here or down here, or they're fixing to do this and do that. And yet it's following its script every week. Scott, I don't know. I don't know what the measured move for NQ is. I never figured it out. And nobody ever told me. So I don't know. I've always said, specifically for ES, for NQ, I don't have one. For Dow, I definitely don't have one. So I can't help you with that. But anyway, our original consolidation became reaccumulation again. But 1 to 2, it's good for me, it's good for you. You know what I'm saying? I don't always try to hold for like the rest of the day or whatever. Simple, easy trades. All right. So we did number 7 and number 8. Let's go back here. That is not what I was looking for. That's my home screen. We did law number 7, right? What you sow, you shall reap, the law of the return, or the law of return. We did law number 8, be a sniper, not a machine gunner, the law of quality. Number 9, okay, take the bird's eye view, the law of the big picture. So that means to zoom out before zooming in. High time frame, then lower. Trading the small time frame without knowing the higher time frame context can lead to confusion and easy mistakes. So what's the law of the big picture for ES? Well, we've been in this nonsense. We've been in this general consolidation for a long time, right? But what did I tell you earlier about that low? That February 6th low is right here. It's the low of February 6th. See that? So that was the only low that was created in the last few weeks. And there's really nothing, there's like no other obvious low except for this one down here. Now, we might be able to measure this imbalance, or I mean, this gap here, or that down candle. We could probably scooch that over. But nonetheless, it's that low. So because we were under it, right? Let me give you a little bit more here. You see, that's right here. So that means that level, that price level, and everything below that is buying below old lows. And did you see this here? That line was in... Did I put that in the video? I can't remember. Well, anyway, I think it was. That low was still here. Right? And it's been here on the stream as well. Why would I do that? Why would I do that? Well, that's London's low. So we have a low below an old low. And then guess what? We have a lower low. So what is that, chat? I didn't make this a law. I should have. Maybe I'll make it law 49. Because we have law of 50. Right? The 50th law. Price has the best setups when you don't trade. Or something like that. Law 49 would be probably the law of turtle soup. And then law 51 would be the law of the screenshot. As soon as you screenshot your profit, price reverses. So this is the turtle soup. This is the low and the lower low. Below an old low. That's turtle soup. So turtle soup set the low. Then the low risk buy, first leg, second leg. And then after that, I don't know. But that's the big picture. Okay, I'll do this one more time. What's the big picture? Well, if we go to a date, you'll see the same thing on the weekly. You'll see the exact same thing, only less candles. From where this week is, okay, we've already taken out last week's low. We were, I don't know if that got mad or not, but either way, that's the February 2nd week. And that was the Friday. So that week, that low is there. So that's the big picture. And if we're going to buy low, sell high, well, we want to buy below old lows. Or on the way to a run on liquidity. Or sweep on liquidity. So we have law 12. Okay, so we did 7, 8, and 9. We did 7, 8, and 9. Now we'll do 12. The law of confluence. Drop a 12 in the chat if you guys are still here. Drop a 12 in the chat. If you guys are looking, you're paying attention, you're going, yeah, this is badass, show me more. That's what I'm here for, baby. That's what I'm here for. Giving you the goods. Without a price tag, too. You should be thankful. You should be thankful. All right. Confluence is key. The law of confluence. Overlapping concepts are high probability. Concepts that overlap with inverted concepts are high probability. Pause right there. Pause right there. Let's investigate. Let's investigate. Concepts that overlap with inverted concepts. What does that mean? Never heard no shit like that before. Of course you have. Of course you have. Don't act brand new, chat. Don't act brand new, chat. Okay, I can't see that text at all. There we go. That's a little bit better. That's a little bit better. All right, it's a little hard to see. because we got so much stuff on here. Okay. Remember, this is that series of up candles that was bearish, right? The 5-minute parameters are here. The 1 minute would be all of these. But the 5-minute is just here. Okay? So since that was traded through, we came back into it, right? Let's investigate what's in there. How does he know to buy that? How does he know? Didn't come down to my imbalance. My mentor teaches me to buy this imbalance. It never goes down there. I know. I made that mistake for a long time too. That low was taken out, right? How did we do it? How did we do it? We did it with an imbalance on the way lower, right? Right there. Bang. Right there. Then we trade through that. But then what's this? We have a what? Inversion right there. Oh, that's fucking weird. It's weird and strange. Then we have an imbalance on the way up, right? Look at that. Make it green. So we have an imbalance on the way up and an imbalance on the way down. We have overlap here. Look where price goes to. Oh, shit. That's weird. That is so weird. Look at that. See that? Bullish imbalance, right? Inside of, don't miss this, 5-minute inversion. So it becomes an inversion. We go to the discount end of it, cut this in half. Okay? I told you precision elements. You're learning precision today. Well, you learn precision every day, but you're learning a lot today. Okay? Discount end. Then we trade through it. Discount end one more time, taking out that low. We leave it. And then that's what you saw in the recording. You just didn't see the 1 minute. I'm not going to show everything on social media. You got to come over here. You got to come over here to get the juice and join the Discord as well. But look, we leave the discount here. Then we go into that imbalance right here on a 1 minute time frame. How do we know which imbalance to trade? How does it wick his entry and then run to his TP? Well, it's not like I press, it's not like I hot dial the market makers or the people that maintain the algorithm or whatever. I don't call the CME and go, yeah, pump it. Pump it. I'm just a guy. I'm just a guy. You know what I mean? But that's what it's doing. That's what the algorithm is doing. It's going to take price, okay? It's going to say, where's there an inefficiency? I got to roll over price down in there. Then I got to find the liquidity. Where's the liquidity at? Equities open. Highs right there. And then just above that, another set of highs are original consolidation. So where's it going to take price to? It's going to create a balanced price range and then run. Bang. So simple. And you were already taught that. You were already taught that. You were already taught that. What do you mean? I don't see it, bro. I don't see it. Concepts that overlap with inversions or inverted concepts are high probability. Bang. You guys have the juice, man. You guys have the juice. And we're not done. So that was law 12. Okay? It's like an OxyClean commercial. But wait, there's more. All right? Law number 13. What's number 13? Law of the roadmap. Now, I do not go into detail in the 48 laws of trading because I had already made a video on that. I already did a masterclass video on it, which was over an hour long. So I basically said, look, this is a law, but what does it tell you? It gives you a bias. Market maker models give you stop loss placement. They give you trade management. They give you entries. They give you timing, and they give you pyramiding. So there's not really a lot, to learn just based off of this, but they are a means of all of those things. So when you understand Look at that fucking bear. I love that bear. I know it's AI, but it's okay. When you understand the roadmap, right? Someone in our chat earlier, someone in our Discord earlier said, when I get to the charts, all I got to do is see what stage we're at, and then I'll know what price is going to do. Exactly. Exactly. Oh, you're trading above an old high and you've got some equal lows? Well, that might be a reversal. Oh, you got first, we traded lower. We got an imbalance or two imbalances or some shit. Oh, that might be distribution. We might start heading for those lows. Bang. Oh, we're going to go for those lows, but I'm going to play another retracement. Back into an old level of accumulation is redistribution to short and go lower. Bang. Oh, wow. Oh, wow. So hard. So difficult. All right, so we did 7, 8, 9. We did 12, 13, very briefly, because again, that's not for the 48 laws. We got to scroll all the way down to law 26. To law 26. Law 26 is use a favorable risk-to-reward ratio, the law of risk-reward. So what does that mean? It means very briefly that we look for big wins relative to the loss. So we want small losses, big wins. Okay? Drop a 26 in the chat if you guys are like, yeah. We need that. We need small losses, big wins. You ever took a really good trade before? And you were so glad that you took a good trade, and then you looked at your history and went, oh man, I only got a loss back. All I did was make a loss back. Man, I wish we could have had profit instead. Well, sometimes it may not be about making your wins bigger as much as it is about making your losses smaller. Okay? There's two sides to that coin. You guys are having a good time in the chat. What's so funny? Am I a funny guy? You think this is funny, chat? You think precision? You think trading really fucking well is hilarious? I think it's hilarious too. Anyway, 1 to 2 or a 1 to 3, that's ideal. Now, anything above that is fine. I'm not going to say don't have a 1 to 10 or some crazy shit. But my point is, the bigger move you need for a higher RR, the less likely it is going to occur. Okay? So 1 to 2, 1 to 3 is great. It's a wonderful starting point. There are times I have shown you a 1 to 1 or I have taken 1 to 1s, and I explain it to you because the further we get into the market maker model, the probabilities go up. So you sacrifice RR for probability. But I won't go too much into that. Yeah, I was a class clown, capitalist. I was a class clown. I'm still laughing. You know why? Because what I do for a living in a car that I fucking drive. That's why. I'm still laughing to this day. You ain't sending me to the principal's office. No more. No more. It was impressive, and now it's funny and still impressive. Yep, I agree. Anyway, to sum this up, I know I've been going for a long time. It's been almost an hour, but right, if you go back, right, what's that right there? When I highlight this RR tool right here, what is that? 1 to 2. Bang. What is that? 1 to 2. Bang. John, man, you look good. You look like you lost some weight. Yo, we got to pin that, dog. That's 2 gold stars for Mr. Seven Figure. 2 gold star. Man, I don't think we've ever given out 2 gold stars at one time before. Hey, man, there's a first time for everything. I have, dude. I have been eating right, or eating better at least. I didn't plan on bringing this up, but I will make a video. I might do it today. If I don't do it today, it'll be tomorrow or soon. But I'm going to make a video on all of the product swaps. So I've swapped out a lot of products for better ones. Like no more plastic water bottles, glass water bottles. All right. No more Doritos, Boulder Canyon chips instead, you know, stuff like that. So obviously I'm not a health and wellness guru. I'm not going to launch some course, but I at least want to make that a video so you guys know. Tiago, I try not to put any more than 2% risk per trade. Anything beyond 2%, I wouldn't do it. But the point is, that's a 1 to 2 RR, which is still good. Still good. How do I know that that's not going to get stopped out? Again, we've already traded that. We've already sweat liquidity, which, by the way, how do you know that's a liquidity sweep to go higher? How do you know it's not going to go down here? Because if you remember, I told you stop hunts typically happen between 75 and 50%. I told you that. Where does that occur? Bang! Right again! Man! John doesn't miss. No, I do. I do take losing trades, yes. But the information that I'm giving you, it still works. Still works. Still ain't supply and demand. Still no indicators. And the stuff still works. If that doesn't give you confidence, I'm not the educator for you. Finally got the ability to trade futures in Germany legally. Oh, nice. You're having a good day, huh? Thanks, John. Thanks for the great nuggets. Oh, yeah. And we're not done. We got one more. We did 7, 8, 9, 12, 13, 26. We're going to do one more. We're going to do one more. We're going to jump from 26 all the way down to 45. Law number 45. Plan all the way to the end. The law of planning. Now, I put an asterisk there because that's an actual law from 48 Laws of Power, which is book of the month, I think, for June or July, or June and July. So I won't speak on that. But what do we do here? Know your entry, stop loss, and TP before entering a trade. Have a plan for every scenario. If you're lost, it's because you don't have a plan or you don't have a roadmap. Proper planning prevents poor performance, right? So entry, stop loss, and TP. How do we know what they are? Well, you can enter inside of inversions. You can place your stop below that inversion. Oh my God, you didn't even... You are all fired. I never want to speak to you guys again. We didn't talk about this. We didn't cover this. Remember yesterday? What did I tell you on yesterday's stream? What did I tell you? That we would, if we trade down and into this, we shouldn't go below that. And I still have an alert for those highs. And what did we do? We went right down in there and it went right for 25,099. Come on, man. It's the same play. It's the same play. Do you guys not understand that? Type play in the chat if you guys get it. P-L-A-Y. Type play in the chat if you guys get it. Reaccumulation to go higher. ES, 5-minute time frame. What is this? Reaccumulation to go higher. It's the same play. It's the same play today as yesterday. 2020 said pray. Oh, okay, we'll do that too. But this was the play from yesterday on a different time frame. Man, these markets are something else. No, they're not. The markets are the same. They're the same today as they were yesterday, as they were 60 years ago. What are you talking about? Oh, but I ran this and I ran that. Yeah, well, I ran this bitch to liquidity. How about that? How about I racked up? I'll just fuck with you. It's that simple, chat. It's the same things, bro. It's the same things over and over and over again. Original consolidation, distribution, redistribution, manipulation, low risk buy, first leg, second leg. All the time. And the algorithm hasn't changed. And it probably won't. Why don't you put more than 2% if you're confident in the way you read price action? I believe you have a good expected value. Because it is how you do one thing is how you do everything. If you start compromising rules here and there, you're going to start compromising more rules here and there. And it's a good way to go on tilt. It's a good way to lose a lot of money quickly. The risk has got to be respected no matter what. It doesn't matter. Even if you feel it in your bones that it's going to be a winning trade, it doesn't matter. You have to respect the risk no matter what. I don't. Oh, here it is. I didn't plan on going over this, Tiago, but you brought it up. I'll give you another one. Law 22. Always respect the risk, the law of risk. Check yourself before you wreck yourself. Set rules for yourself and follow them. Max daily loss limit and a weekly loss limit. Max daily number of trades and max risk per trade. That's a law you have to follow. So again, that's a great question, and I'm glad you asked, because I've wrestled with that too before. Trust me, I could have made a lot more money over the years if I simply went harder. Sure, but there is a. Let me look this up real quick, and then we'll end it. Okay, I gotta find it. One second. There we go. Proverbs 13:11. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. Oh, John, but they didn't have day trading in Jesus's time, bro. That's true. I don't think they day traded futures. I don't think Christ did that. But the principle is the same, no pun intended. The idea, it remains the same. What's slow will grow, what's fast doesn't last. Can you run up accounts? Of course you can. The problem, and it's just like when people win at the gambling tables, people that make money quickly, they don't know when to stop. And because they don't have that discipline to stop, they eventually lose it. Oh, ask anybody that loves going to Vegas. Or if you've ever been to Vegas, ask anybody that repeatedly goes to Vegas. Hey, bro, you ever been up a fat bag and then lost it all? They're going to be like, dude, what are you talking about? Is water wet? You know what I'm saying? Like, of course. It's the same idea. If you start over leveraging and taking win after win after win, chances are you're going to get that ego inside of you. We all have it, right? We just have to limit that. So you have to keep your risk in check. Otherwise, you're going to lose your shirt at one point or another. So does that make sense, Tiago? And everybody else? Does that make sense? I'm not saying that you can't do it. You want to go 3 to 5%? It's your account. Do what you want. But I'm warning you. I am warning you. It may work in the short term, but it's an issue of sustainability. It's not sustainable. It might work for a couple trades, but eventually you're going to crash and burn, and then you're going to get pissed off at me. Or pissed off at somebody else. Or pissed off at the platform. I mean, Top Step X, they got some serious problems with their shit, but, you know, for everybody else, you know, you're going to not take responsibility, but it's something that you did. So this is a long-term game, not something that's quick. Okay? So with that being said, hopefully you guys got a lot of value today. Hopefully so. Drop a like on the stream if you guys did get some value today. I would greatly appreciate that. But that's going to be it. We talked about a lot of stuff today. Law 7, 8, 9, Law 12 and 13, Law 26, Law 45, and then I threw in Law 22 right there at the very end at no additional charge. You like that? Do you like that? I'm live every Monday, Tuesday, Wednesday, and Friday at 1 p.m. EST. Always. Always. Oh, I lied. Fridays are members only streams now. Forgot. But for the free, Monday, Tuesday, Wednesday, 1 p.m. EST every week. And then Fridays, it's the same time, but members only streams. So, all right. Y'all be good, man. We'll be here same time, same place tomorrow on Wednesday the 4th. I will put out a market review later this evening for the SMS community. Be blessed. Make good decisions. And I'll see you tomorrow.